As demand for credit continues, we expect credit and deposit may grow up by 14 to 15% in financial year 24. In the backdrop of this economic environment, I would like to place before all of you the highlights of the bank's performance in Q1 of financial year 24. I am pleased to announce that for once again we have recorded the highest ever profit, and also this is something which is a matter of pride for us. It may not be out of place to mention that very often there is a tendency on the part of the analyst community to really evaluate the performance in terms of quarter on quarter. We have to be very mindful of the fact that the Q1 is always a unique quarter because of the two reasons. Invariably in the last quarter we have sufficient earnings. Various one-offs are there which are getting recorded, whereas in the first quarter those benefits are not available. Secondly, when it comes to asset quality as well, when we reckon the stress or NPA or SMA, they are at a point of time. Whereas the fact of the matter is that at a point of time there could be a deterioration, but overall the recovery keeps on happening every day. For instance, in the current instance also, when we look at our SMA 1 and SMA 2, which is actually stress is around 7,000 odd crores. But if we look at it at the end of the month of July, we have already recovered 1,500 crores out of that. So I think to that extent, it is very material that we should actually evaluate YOY performance in the first quarter as compared to the first quarter of the previous financial year. So in that context, we have posted the highest ever quarterly profit of 16,884 crores. Net profit for this Q1 has increased by 178% YOY, with operating profit at 25,297. It has increased by 98.37% on a YOY basis. ROF the bank for Q1 has improved by 74 basis points and it is at 1.22%. ROE has improved to 24.42%. Most other core profitability metrics have also improved sequentially as well as on a YOY basis. Net interest income for Q1 increased by 24.71% on the back of improvement in yields and continuing credit offtake. Domestic NIM stands at 3.47%, and it becomes all the more relevant in the context of our bank because our international book is just about 5 lakh crore, 5 trillion, and our total asset side is about 33 trillion. And also when it comes to international book, we are very, very mindful in terms of the evolving global economy and the kind of stresses and strains which are evident in the global economy. So that's the very reason why our domestic book has grown almost at about 15% plus, whereas the international book has grown little lower, and that is a very, very conscious effort on our part. When it comes to operating expenses, they have increased by 23.68%. We have actually started building provision for the wage revision, and we have started building provision from the month of November onwards of the previous financial year, and that is the reason why it looks little on the higher side. But if you really look at it, the cost to income ratio, we are just about 50%. On the business front, the credit growth has been robust across all the segments. Domestic advances, as I was indicating, it has grown by 15%, comprising it's a very broad-based growth which we have witnessed. Retail advances have grown at 16% plus, and corporate segment grew almost at about 12% plus. SME and agri segment have posted handsome growth of 18% plus and 14% plus, almost 15%. Domestic deposits grew almost about 12%, driven by the growth in the current account and the term deposit. This is a general phenomena which we normally witness. When the inflation is on the high side, normally the money moves from the savings bank account to the term deposit, and the same behavior we have seen. And the current account growth is essentially attributed to the fact that we have started focusing on the non-government current accounts, and happy to share with all of you that even in the month of March as well as in the month of June and even in the month of July, we have been growing at a decent pace. It is much higher than any of the competitor also. So which very clearly means that going forward it will have an impact on the composition of CASA in the days to come. With regard to asset quality, our NPA ratio has come down by 115 basis points YOY, and it stands at 2.76% and continues to be at its lowest level in more than 10 years. Our net NPA ratio has also declined by 29 basis points and stands at 0.71%. Slippage ratio has improved by 44 basis points YOY and it stands at 0.94%. Consistently improving asset quality is also reflected in our credit cost, which stands at 32 basis points and has improved by 29 basis points YOY basis. We have a well-provided stress book. PCR is showing an improvement by 23 basis points. It is at 74.82%. It actually went up by 127 basis points on a YOY basis and stands at, if at all we include OCA, it stands at 91.41%. On the restructuring front, our total exposure under COVID Resolution Plan 1 and 2 now stands at 22,000 crores, 22,666 crores, as at the end of Q1 of financial year 24. The restructuring book has actually behaved very well. Even if we reckon the SMA1 and SMA2 in the restructuring book, it stands at only at 11%, whereas if you recall, we have already kept a provision of 30% for this book, and going forward we are hoping that it will even behave even better. SMA1 and SMA2 does not necessarily become the NPA. This is nothing but a reflection of some kind of a stress on the cash flow for this kind of a book, but we have invariably seen that a significant portion of SMA1 and SMA2 gets recovered and it becomes a performing. The broad trend which I indicated, that out of 7,200 odd crores, 1,500 crore we have already recovered within a month of the account turning the stress account. So that's the kind of a situation. When it comes to the capital adequacy, the bank remains very well capitalized and we have sufficient headroom to take care of the normal business growth requirement. We have worked out that based upon the current capital adequacy, we are very well placed to support the further loan book growth to the extent of 7 trillion. Digital continues to be an important customer acquisition engine for the bank across the asset as well as the liability product. During the quarter, we have sourced 63% of savings bank account and 35% of retail asset accounts digitally through YONO. We have recently launched YONO for every Indian, in which customers of other bank can now access experience of seamless UPI journey on YONO. Our subsidiaries have consistently performed well and continue to create significant value for all the stakeholders and most importantly for the customers of the bank. Most of our subsidiaries are leaders in their respective segment, and we will continue to nurture these subsidiaries and see them creating value for their own shareholders as well as the shareholders of SBI. Before I conclude, I thank you all for your continuous support to the bank. We consider it as a privilege to be able to contribute towards the growth of our economy. We remain committed to rewarding your trust in us with superior sustainable return over the long term. I wish everyone the very best. The floor is now open for all your questions. Thank you.
Thank you very much, sir. Now we move to the question and answer session. Now to a seamless flow of the session, we will move from left to right, allowing everyone an equal chance to ask a question. You may raise your hand and ask your question by using your name and the media house you are representing. We request you to please follow the format and restrict yourself to two questions focused on the bank's results. If time permits, we may request the circuit for additional questions. So now, Saksham, please.
Can somebody use the mic, please? I mean, you people can use the mic. Yeah.
Left to right, you said, no? Lalit?
Yes,
He's left.
That's right.
He's left.
Who's left?
He's left.
Daniel, please go ahead.
Can
I think you have seen perhaps it has been a trend in the banking industry. All other banks have also witnessed, and as far as we are concerned, the drop in CASA for us is much lower as compared to what the competition has seen. Not as of now. Sorry? It is 3.47% domestic NIM. I hope so. Because if you look at yield on advances and our cost of deposit, I think it should be stabilizing around this level. Sorry? I'm unable to hear you, please. Recoveries we have affected recovery of about 1,200 odd crores, whereas last year around the same quarter this was 500 crores more. And the reason behind is at that point of time we had some reasonably higher value of recoveries. Now the stock left out is not all that big in number, and that is the reason why what recoveries are being affected. It may not really look as high as we have seen in the previous years because the chunky numbers are not there now. Sorry? Credit card book? No, credit card is a separate entity. It is not in the main bank. But as far as the credit card is concerned, even there also they have made adequate provisions to take care of any potential delinquencies. So I think there is not much of a challenge there. In terms of, so long as the book is well protected, it takes care of the requirements of that industry. See, when it comes to asset quality, I would like to mention a couple of things. One is the underwriting, which I think we have strengthened our underwriting mechanism quite well. Second comes more so when it comes to retail. The very important component for retail is underwriting is very important. It should be essentially loan management system which should be underwriting, which means that hardly any discussion on the ground so that people should not deviate from the underwriting principles. The second component which is very important for the retail in particular is essentially in terms of the control and follow-up. And we have very robust control and follow-up mechanism, and that is the reason why I could immediately relate with you and say that out of 7,200 odd crores worth of slippages, we could pull back 1,500 crore. So that is nothing but the effective machinery on ground to make the recoveries. So I think we are seeing very good results. So I would say that on these two counts we don't have any challenge. Now when it comes to when you look at slippages, in our case the slippages are not as much coming from the running accounts, and even for that matter, even stock of our stress portfolio has also grown significantly. Corporate does not have anything, SME does not have anything, retail does not have anything. Only slippage has come from SME and agri, and there also we could pull back a significant portion. So I think it's a function of the economy on ground, and I would say that the cash flow disruptions lead to some kind of disruption in the repayment timing. But more or less, I would say that there is, in terms of quality, it's a much better quality, and in terms of the portfolio.
First thing, sir, I would like to ask about the credit growth guidance which you have given about 14 to 15%. You have already grown 13%. What is the confidence?
Actually, 14 to 15%, I would say that though it is looking at 13.90, but for all purposes, it is actually 15% plus. Reason behind is that our international book, we will be very selective. We may not grow as we will be growing in the domestic market, for the simple reason that the international markets are very, very choppy, and we will be really growing in those markets if at all we can take care of the quality of the risk. Yeah,
So
please.
any sector specific you can give idea where you are seeing the growth, and also the distribution between corporate and retail?
I think more or less now as the situation stands, we are somewhere around 60% as well as it is. So we will be evaluating the opportunities. If at all there are opportunities for growth in corporate, we'll be more than happy to support it. We don't have a constraint in terms of the funds. We have got enough funds available. Even today also we have got excess SLR to the extent of about 4 trillion. So if at all opportunities are there and it meets our risk appetite, we'll be more than happy to support.
So one question regarding NIMs. That has been one of the points which has been raised by the analysts, although you have mentioned that one should not look on quarter. But what has been the reason behind the decline?
See, reason is, if at all, I would, last quarter of the previous year, we had about 850 odd crore worth of interest coming on the income tax refund. So these one-offs are the one which are normally seen in the last quarters. So in fact, in this quarter, we don't have any one-off. So I think if at all you are looking at the core business model of the bank, then there is no challenge, and we are at 3.47%, as I mentioned, on a YOY basis.
अनुराग from Indian सर मेरा सवाल इस तरह से अल्टरनेट चैनल में आपने बताया कि 63% ऑफ SBI अकाउंट जो है वो यूरो के थ्रू आ रहे हैं, लेकिन यूरो को शुरू हुए करीब 6 साल से ज़्यादा का वक्त हो गया और आपके ओवरऑल अकाउंट बेस में देखिए तो उसकी जो ग्रोथ है वो बाकी बैंक जो भी 2 साल में रिटर्न की ग्रोथ की उसकी आधी है, तो क्या इस पे कॉशियस के अलावा
आप इसको जो है किस तरह से कहेंगे आधी है, ये बताइए।
नंबर ऑफ सब्सक्राइबर्स के बेस?
देखिए, ऐसा है कि हमारे सब्सक्राइबर 6.5 करोड़ हैं। 10 करोड़ हमारे इंटरनेट बैंकिंग के कस्टमर हैं, रिटेल इंटरनेट बैंकिंग के कस्टमर। तो हम सिर्फ योनो ही नहीं ऑफर कर रहे हैं, हम उनको मल्टीपल चैनल्स ऑफर कर रहे हैं। अगर आप उसको इस तरह से नहीं देखेंगे और जो टोटल कस्टमर बेस होगा तकरीबन अबाउट 45 करोड़ के करीब है, उसमें से जनधन अकाउंट आप निकाल दीजिए, वो तकरीबन 12-13 करोड़ के करीब वो है। तो उसमें से अगर आप देखेंगे कि आप अगर जो है 35 करोड़ की जो है रिमेनिंग पॉपुलेशन में से अगर 16-17 करोड़ आपने कर दिया, आप जब अगर बेस छोटा होगा उसके ऊपर कुछ भी चीज़ बड़ी दिखाई देगी। देखिए, तो मार्केट डायनामिक्स है, ये समय समय पर जो भी जो मार्केट की रिक्वायरमेंट्स रहती हैं, हम अकॉर्डिंगली जो हमारे को कमर्शियली भी सूट करता हो और जो हमारे कस्टमर का इंटरेस्ट को भी जो है टेक केयर करता हो, उस तरह से हम लोग अपनी स्ट्रेटेजी बनाते रहते हैं। सॉरी, आई एम अनेबल टू हियर यू। हाँ, no, last year we had first quarter of the previous year we had an MTM loss, which is not there this time. Other component, that's the major one. That's the major one which has made a difference. Yeah. Recoveries. See, when it comes to as I mentioned, that we don't have any high value or the chunky assets which are left out for resolution. They are all very small assets which are there, but our effort is to now really recover that also. So in terms of recovery, Biswas, can you?
Sir, we have a target of net NPA of 0.5%.
Yeah.
0.5%.
Net NPA 0.5%.
Sir, if I understood the question, answer rightly, the net profit has really gone up substantially, 117%. Is it due to one of other income?
No, it is not because of, but also because of the lower NPAs also, lower provisioning, and also increase in the loan book and also yield on advances.
You have a sizable home loan portfolio. Recently, we have seen HDFC Bank and HDFC Advance, and HDFC Bank is now providing facilities on home loan. If you can, how is the competition doing?
These are the realities of life. We have to face that competition, and we will see that we should stay ahead of the competition.
Shayan from Mint. What is the corporate lending pipeline like?
It is about 3.5 trillion is already there.
So that is for working capital and term together.
Yeah, it could be both.
And so which areas are you seeing
See, we have seen growth coming from partly from manufacturing, partly from road and construction, partly from airport, and also some bit of a growth which has come in from renewable energy is another very important focus area where there we have seen significant growth coming in.
When you said that you have recovered 1,500 crore of that SME 1 and 2, are there any specific pockets of stress that you have?
See, majorly I would say that the recovery has happened in SME and also into SME and also retail, pure play retail, personal segment. And other than that, even we have recovered in agri. In fact, it is uniform. But the point is that stress is not there in corporate, large corporate and mid corporate. There is no stress.
Ritu from CNBC.
So while we appreciate this, you said not all SME 1 and 2 will become MPAs. The book has sort of doubled quarter on quarter. So if you could give us a sense of where this additional stress is from, and even any slippages, besides agri and SME, are there any areas of concern? And if you could provide a number for the full year, what is the kind of slippage and credit cost that you see?
I think our effort would be to keep the credit cost less than 0.50 for the fiscal. And when it comes to visibility of stress, see again that visibility of stress is a function of the real economy. If at all real economy is doing well, we hardly get to see any stress. If at all people are getting in time, we don't see any stress in retail book also. Because if you will look at it, the composition of our retail book, our express credit is majorly into the those people who are earning salaries, and they are majorly state government, central government, public sector undertaking, or the defense forces. So long as they are getting their salaries, there is no stress. So SME, yes, of course. Some of the pockets wherever there are cash flow challenges, there is a tendency. But I would say that we have seen the trend that people normally try to repay that also. It may get delayed, but it gets paid off.
And so, in terms of your credit growth target for the year, is 3.5 trillion in pipeline. What will that entail in terms of overall credit growth? And
I have been maintaining 14 to 16% kind of a credit growth. I will stick to that number because we normally look at it in terms of the nominal growth of the economy, and we're growing at a faster than the nominal growth of the economy.
pockets you can outline where you've seen
We will be growing everywhere. We will be growing in retail, SME, and also into agri. And when it comes to corporate, we are open for all kind of opportunities. Maybe renewable, maybe services, maybe infrastructure like road, construction. So, but it should meet our risk appetite.
Abhijit from Business Side.
You spoke about 3.5 trillion of corporate pipeline. How much of that was approved in the first quarter?
Yeah, sure. I will just let you know. Just a second. Already sanctioned is already sanctioned and pending disbursement is 1.16 trillion.
How much was fresh was approved in the quarter one? That was one.
Both the number nahi, I don't
Kind of breakup will not be there. Actually, it is a cumulative number which is towards.
For carry on.
Hitesh from Indian Express.
Sorry?
How much was it from SME and
Which one?
of the total slippages?
Just one second.
200 is SC.
Agri was 2,300.
What's your outlook on SME and these slippages for the year?
SME we have actually pulled back 24%. So I think we should not have much of a challenge. It will not eventually not show up in the NPS. Only thing is SMA 0, 1, 2 is something we have to keep on following up. Efforts on ground goes up.
So sorry to interrupt. Coming to the CASA, you said that is inflation and then the interest rate cycle. That was now the signals are more stability growth. So would that also reflect in your CASA or that would continue to?
No, actually, our effort would be to improve the CASA with the current account component. Because when it comes to savings bank, these days the kind of product variants which are there normally sweep their balances. So that is something which is going to be a reality. As the economy develops, this is the kind of a tendency which will be seen. So our effort is to build up CASA through the current account route now.
Current 42 or level, that should suffice.
Sorry?
42 current level that you have.
I think we should rather try to improve it.
Joel from Economic Times. Sir, your provisions have dropped year on year. And
Sorry?
your provisions have dropped year on year.
If at all we don't have NPA, you should be rather happy. If at all we don't have NPA, we don't have to provide. And the other piece is, the aging provisions are not there because we have already taken care of all.
Yes, sir. My question is actually that excluding AUCA, your provisions have also fallen. I was expecting that you would.
Because
yeah.
why should I provide?
Yeah.
You tell me, if my assets are performing, why should I provide? After all, I have to be accountable to my shareholders.
So is there any write back that you all have done? That was my question.
No.
In this quarter or
Any right back? No.
Sir, I will just explain it to him. See, when you have a fresh NPA, you have to provide less, right? So, with, as sir mentioned rightly, we didn't have much of aging provision for this quarter. So, since the fresh NPA you have to provide less, in reality, it appears that we have provided less. But you have to also remember one thing, that when we recover from a loss account, we have to reverse 100% of the provision that we have already made. So if you add the dynamics, it will come to a number which has been displayed in the balance sheet.
Also in the last quarter, we made some specific provisions for some specific accounts. This time we have this one. And also some
See, I think if you see the trend, sir, if you permit,
Please.
industry-wise, as the legacy books get provided fully, you will see less and less PCR. The PCRs will keep coming down overall. I mean, because AUCA has reached 100%, for example, right? So I think it's a general trend.
The second question is that I'm seeing a trend where quarter on quarter, if you see the slippages are increasing. If you see versus December, March, now June, is there something that is shifting? You mentioned that SME agree with where the fresh slippages are coming. On except corporate, except retail, where because of which these slippages are the supply.
No, I mentioned, when it comes to what happens is that the trend which you have mentioned, this looks to be on the little higher side because I think we have got that trend also in this presentation. And if we look at that trend, this is actually, it looks little on the higher side. But the fact of the matter, if we compare with the previous quarter, yes, it is on the higher side. But if we compare a quarter of the previous year, then it is on the lower side. It was actually much higher. From there, it has come down to, if at all I'm not mistaken, it was somewhere around 9,700 odd crore in the first quarter of the previous year. From there, it has come down to about 7,600 crores. So, as I mentioned, that whatever recoveries we are affecting in the month of July, it will actually get reflected in the September quarter. So, to that extent, the subsequent quarters will have the impact of the recoveries of the previous quarter. Whereas in the first quarter, we don't have any such thing, because whatever recoveries were affected, they were all accounted for as on 31st of March of the previous year. So that is the difference.
So, but if you see slide 39, so in that slide it's a complete gradient starting from the Q1 to Q4. So in Q1 it was already higher. So Q1 that and Q1 this, the gradient is still maintains, and further gradient we expect in Q2, Q3.
So actually now, if you really look at it, from that level 9,000 odd, it has come to 7,000. So now the base becomes 7,000 odd crores as compared to 9,000 previous year. So it will actually, our total balance sheet size will go up, and this will further come down.
months after being slam dunked by Hindenburg allegations, the Adani Group is returning to mergers and acquisitions with a vengeance. Early Thursday morning, reports emerged that Ambuja Cement, a company Adani bought a year ago, is in turn buying majority stake in Sanghi Industries. The deal was confirmed by Gautam Adani at 9:25 this morning, who said the move will considerably leverage the group's shipping advantages. He also announced that the Sanghi plant capacity will be doubled to 15 million tons per year. 25 minutes later, his son Karan Adani, in his first such appearance, broadcast the deal on social media platforms, saying the board of Ambuja Cements had approved a purchase of 56.74% for an enterprise value of 5,000 crore rupees.
Our vision is to produce lowest cost clinker in the country at Sanghipuram and then transport this clinker as well as bulk cement through coastal routes to the markets of Saurashtra, South Gujarat, Mumbai and Mumbai metropolitan region, Karnataka and Kerala. Synergies with the assets of Adani ports will help us in implementation of this strategy. With the right implementation, we are very confident that we would be the lowest cost supplier of cement in all of these markets.
Sanghi Industries currently has a cement capacity of 6.1 million tons, clinker capacity of 6.6 million tons and limestone reserves of 1 billion tons. It also has a captive 130 megawatt power plant and a captive jetty at Sanghipuram. Its plant in Sanghipuram is the biggest single location cement facility in the country. The company has, however, been in trouble with rating agencies downgrading it in June after it was unable to service its debt. The Sanghi deal is the second big cement deal for Adani after it bought Ambuja Cement and ACC last year from Swiss-based Holcim for 51,000 crore rupees. The group, though, is still far behind market leader Ultratech Cements.
With the ongoing capex of 14 million tons per annum and commissioning of 5.5 million tons per annum of cement capacity at Dahej and Ametha in Q2 of FY'23, the Adani Group's capacity will be 101 million tons per annum by 2025. Ambuja's goal of 140 million ton per annum capacity by 2028 is well on track, and with this acquisition, we are very confident that we will achieve this ahead of time.
As per the deal, Ambuja Cements will acquire stake from the existing promoters of Sanghi Industries at around 114 rupees per share. At this pricing, the promoters will receive 1,675 crore rupees for their 56.74%.
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D streets, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll get you expert views to find out where exactly can money be made in this current market setup. First up, a quick check on how the markets are moving as we inch closer to the day's close. So handsome gains on the Nifty and the Sensex, 0.8% of a rise, 19,530 currently on the Nifty pack. The Sensex up by 525 points at 65,766. And when we look at below the surface as well, the broader markets in fine fettle, you can also look at the sectoral indices that are doing very well to overall boost the sentiment in this trade. So you can see the mid caps are up by 0.8%, Similar gains on the small cap 100 indices. The Nifty Bank is getting the support from all cylinders, be the private banks, be the PSU banks or the financial services, all of them lifting the Nifty Bank index. Although it was slightly choppy in the last 2 hours or so, it's again come off the day's low point and is up by 1% odd or so. It's the PSU banks that have in fact slipped 0.5% lower in trade, and that's why you can actually